You're with Chinchu. Today's point of discussion is about BRS, Bank Reconciliation Statement, which is kind of a vital part of our employment while we are working, while we are studying, everywhere. Whether it's going to be an interview question, it could be anywhere and everywhere. It's such an important and crucial part of accounting subject as such. So what is BRS? It's Bank Reconciliation Statement. It is kind of a reconciliation statement which we are preparing in order to match the balances of passbook along with cash book. In the sense, we will be having a particular balance of cash in our books, right? We maintain our cash book, and with the bank as well, we will be having a passbook, right? So what we literally do in VRS is we are reconciling the balances of cash book along with passbook, or we say bank book. Reconciliation statement, we are going to match the balances, maybe match individual balances or together or aggregate amounts to find the differences or discrepancies, where is the variances, and in order to resolve that and find the reason for such differences. Now, what are the reasons for this differences between the cash book and the bank book, or the differences in BRS? It could be a lot of differences. Say for example, checks issued but not presented in bank. Okay, I have issued a particular check of, say for example, 5,000 to a supplier wherein I have to make a payment. I have issued a check, right? So as per my books, it is already being paid, like my cash is lost, something like that. I have given 5,000 rupees out. So that 5,000 would be reduced as per my books, right? But that particular supplier took the check from me. He didn't present it in the bank yet. He might be lazy, or he might be waiting for 2 or 3 more days in order to present that particular check in the bank. So as per my bank account or my bank book, that check amounting 5,000 rupees is not yet deducted. So 5,000 would be more in the bank, but 5,000 would be less in my cash book or in the according to the book which I maintain with me. All right. Those are normally said to be unpresented checks. Second scenario is a customer owe me some rupees, maybe 10,000 rupees. He has to give me 10,000 rupees. Instead of giving me directly 10,000 rupees, he directly went to the bank and deposited into my bank. So that particular 10,000 rupees, as per the bank, it would be increased, but I'm not even aware of it. And I have not recorded that in my books. So that 10,000 would be lower in my cash book, but 10,000 would be higher balance. It will show a plus 10,000 in the bank account. Third scenario is interest charged by the bank or interest deducted by the bank. It could be due to loan or any other scenario. Okay, the bank would be deducting that particular interest of maybe 1,000 rupees every month. That is anyway automatically being done by bank. I might not have recorded that or deducted that balance in my books. That could be the third reason for the difference. Fourth reason could be interest received or dividends received. That is, I might have invested in something, okay? I might have some kind of long-term investment wherein I'm receiving some kind of interest, or I would have invested in some shares or stocks wherein I'm receiving some kind of dividends wherein my bank account is being linked. So in my bank, automatically whenever that particular payment is coming in, maybe monthly basis, maybe quarterly basis, depending on whatsoever the scenario is, that particular interest and the dividend is getting credited in my bank, but that is not yet recorded in my books because I'm not aware of it. Maybe I forgot to record it. Maybe it could be any reason for that. Okay, that might be the reason. Another reason for such kind of a difference between my cash book and the bank book could be any repetitive payment which my bank is making on my behalf. Say for example, I have assigned my bank to make my repetitive payments such as electricity bills. It could be electricity bills, it could be water bills, something of such nature which is repetitive, which could be monthly and which is occurring every now and then. I have assigned my bank to make such kind of payments on a regular basis, that is on a monthly basis. It would be deducted from my bank account, whereas it might not have been deducted from my cash book. I might not be recording it, but anyhow it would be on a repetitive basis, on a monthly basis it would be deducted from my bank account. So my bank will show a lower balance in such scenarios. So say these could be some reasons wherein the cash book and the bank book shows a difference balance. In such scenarios, what we can actually do is that we can either take the bank balance and do all those plus minus, additions, deletions to reach the balance of cash, or I can take my cash book, the balance as per my cash book, and do all those additions and deletions to reach the bank balance. Either way we can do it, okay? I'll explain these two ways in separate two scenarios. The very first scenario wherein I have taken my cash book balance, that is literally right now I am having a balance of 5,000 rupees. let's take a simple example, okay? I'm not that rich. So I'm having something like around 5,000 rupees as per my cash book. And my bank should be showing some other balance as per the passbook. So what I'm doing right now, I'll analyze the reasons. First reason what it could be, check presented. Check issued but not presented. That is, I might have issued a 2,000 rupees check, but it is not yet presented for payment in the bank. So it is already that 2,000 is gone from my cash book but not deducted from the bank. So I'm initiating the entire transaction from the cash book and I'm trying to reach the bank book, right? Bank has shown a increased balance because that 2,000 is not deducted yet. So in order to reach to the bank balance, what I would do, plus 2,000. So 5,000 plus 2,000, all these addition would be showing in some corner of my screen, I believe, okay? 5,000 plus 2,000, now the balance is 7,000. Second, what could be second reason? Interest directly received and dividend which is already received in the bank account directly because my bank has been assigned or bank account is being linked to that particular payment. Okay, so I might have received some interest of 2,000 rupees and dividend of 1,000 rupees. Total of 3,000 rupees I have received in my bank account but not yet recorded in my cash book. So in order to reach the bank balance, what I would do? Plus 3,000. So 5,000 plus 2,000, 7,000. Now I am adding this interest and dividend, so it is another 3,000. So 7,000 plus 3,000, 10,000. If I just miss out on any numbers, just ignore that, okay? I'm doing all that mind calculations. So right now my cash book balance has reached 10,000. Still I have to reach the bank balance, right? Now what scenarios? It could be interest deducted by the bank. It could be interest on loan or something like that. 1,000 rupees interest is deducted by bank on a monthly basis. It is a repetitive expense of me, but I have not deducted or recorded that particular expense in my cash book. So what I should do? Minus 1,000. As per my cash book, what I will do? Minus 1,000. So 10,000 minus 1,000, it's another 9,000. So I'm almost about to reach the bank balance. Now what could be another difference area? It could be, what could be? Maybe checks directly deposited by customer of me. Okay, directly deposited into my bank account, which means he has deposited something around 6,000 rupees directly into bank. I have not recorded it. I'm not even aware of it. So it is not recorded into my cash book. So now my bank balance has to, my cash book has to be added with that 1,000, with that amount, with that 6,000 rupees, which means 9,000 plus 6,000, which is 15,000 rupees. All right. Now the second scenario, which is entirely the reversal. What I'm doing, I'm taking the bank balance already and trying to reach to the cash balance, which I'm right now having as per my cash book. So I'm already starting with that 15,000, okay? I think I know the numbers, I'm not sure about it. 15,000, my bank balance. Let's initiate every plus and minus and analyze now. Okay, we have started the second scenario already, wherein we are starting from the bank book balance to reach the cash book balance, okay? The reversal of the first scenario. Simple, keep it simple. I have right now, I think 15,000 balance in my bank. Okay, I'm trying to reach to the cash book balance, okay? So one scenario what we have recently discussed is that check directly deposited by my customer into my bank account. Okay, a check of worth 6,000 rupees is being directly deposited by my customer into my bank account. So in my bank book, 6,000 plus is there, but that particular thing, I'm not even aware of it. I might not be aware of it and I have not recorded it in my cash book. So what should be done? In the bank account, bank balance to reach the cash balance. Cash balance is low, right? We have to reach to this balance. So what should be done? That 6,000 has to be deducted from the bank balance or bank book. So minus 6,000, which is 15,000 minus 6,000 is 9,000. Next is interest and dividend directly collected by the bank received into the bank account, which was interest of 2,000 rupees and dividend of 1,000 rupees. A total of 3,000 rupees which is received by the bank directly. So there is a plus in the bank of 3,000, but that is not even recorded in our cash book. So in order to reach the cash book, what we will do? Minus 3,000. So 9,000 minus 3,000. Again, now the balance has reached to 6,000. Okay. Now what next? Interest expense charged by the bank directly. It could be an interest on any kind of loan or something else. The interest expense which is already being deducted, from the bank on a monthly basis every month, okay? That particular 1,000 rupees, which is an expense, is being already deducted from the bank, but it is not yet recorded. That particular expense is not recorded or deducted in our cash book. So what we will be doing, that 1000, in order to reach the cash book balance, we would be adding back that 1000. So plus 1000 with the bank balance, now the bank balance is 7000. Now the recent balance is 7000 rupees, okay. Now again we are just finally reaching to the cash balance from the bank balance. Final balance, final difference is what? 2000 rupees. 2000 is a check issued by me to my supplier. Okay, that particular check is what kind of check it is? Check is issued but not yet presented for payment in the bank, which means when I have issued 2000 rupees check for my payment, for meeting my payment to my supplier directly, I have recorded that particular expense. I have deducted that particular 2000 from my cash book already, right? But that particular supplier has kept the check with him only. He has not yet presented in the bank. So that particular 2000 is not yet deducted from the bank, or it is not yet actually gone from the bank. But this scenario is the second scenario wherein I am trying to reach to the cash balance from my bank balance. In the cash book balance, what it is done, already 2000 is deducted. So in order to reach the cash book balance from the bank balance, what I should be doing? Minus 2000. So 7000 rupees minus 2000 is 5000 rupees, which was absolutely the 5000 rupees cash balance wherein we have started everything. So that's how the two scenarios working. This is kind of an introductory, plus someone who is studying BRS for the first time. We have analyzed the various kind of differences, how to reach from one balance to other. The reversal also I have worked in so that it would be little more clear for you to understand. The organization, what we are doing is actually balancing the ERP ledger, which is the tally ledger balances. Accounting software wherein we are actually working in those balances with the bank statement balance. You would be doing all that matching. Some amounts might be individually matched, some amounts might be, some aggregates might be matched. All after doing all those plus minus, we are just reconciling and finding the reasons for the difference. Apart from this, there could be omission errors, there could be duplication. I might have forgot to record a particular expense in my cash book. That is omission. There are n number of reasons due to which BRS shows some kind of reconciling items. So that's it for today's video. I think it's kind of a short video. See you in the next videos. I'll be uploading a lot of informative videos. Stay tuned, keep subscribing, keep liking, and do comment below whatever you want to know, any topics on which you need classes or any other particular scenarios, job opportunities or something like that. Till next time, take care, bye-bye.